Alright guys, my name is Danny, the Power Trader. I am starting a new series of Rags to Riches. I'm going to show my live trading very soon. I'm going to start showing how I'm starting from a small evaluation account and a small personal account, and we're going to see how I grow it. Now, before I get to that, that's later on. I just want to talk real quick about time bars. Time-based bars, as you see a lot online, on YouTube, on a lot of these guys, a lot of the traders are using time bars. A lot of them make good money. I'm not gonna lie, they do make a lot of good money. But you know, they've been doing it for years and they know how to really use their strategy for that system. Me, I honestly don't like time bars for full trading decisions. I do use them, but differently. I prefer to have something that gives me more predefined risk, and that way when I have a predefined risk, I can apply a proper money management protocol that will allow me to manage a good risk reward ratio. And on time bars, as you can see here, let's just choose a 5-minute bar for now. This is the YM. It's 2 p.m. I'm just looking at this chart, doing this video. You could ignore these. These things are all like pivot points and all that stuff. That's for later on also. This is a 5-minute chart. Let's say you're looking at a trade right here. I don't know why I have this black, but I do. Here we go. 5-minute chart. Let's call it. You do a little flaggy right here and you take a trade there. Now, notice, yes, this trade made money. It was a really good trade if that's the type of trades you take. You know, made 100 and something ticks. That's really good in like how many minutes? Now, I don't trade like that, obviously. I have my own system that I've been developing for a couple of years. And I just want to show you that if you take a trade here, the majority of the time, the time bars are a little bit unpredictable as far as the size that they're going to be, because a time bar has expanding and retracting volatility, and you don't actually know. Like right here, this trade is, if you take a stop from right here to right there, that's about 63 ticks, 67 ticks. Okay, that's because this bar was this size. Bam. So you didn't know that you were gonna risk 67 on that trade right away. So, and if you did, then you'll have to change your position size accordingly. Some people like to DCA, or double down, build their positions on the way down. I don't like that type of stuff. I honestly really prefer a predefined risk. I want to know exactly how much I'm risking, exactly how much I'm willing to risk on each trade, because then it's a lot easier for me to say, okay, if I'm going to risk 20 ticks on every trade for the next hour, then I'm willing to make, I'm able to make 20, 30, 40, 50 ticks back. If I want to risk 20 points, then I want to make 20 points back. That gives me a 1-to-1 risk reward. Obviously I prefer the 2-to-1, but you know, I take what the market gives me. On these charts, if you take a trade there, that was 67. Now let's say you come over here, look at the size of these bars. They go up there. Take a trade down here for some reason. I don't know why you would, but you take a trade here. Let's just say your risk is 100 and something. If that's the trade right there. Oh, here, this is a nice another little flaggy. You take a trade here. My risk is 69 and change, another 67. Okay, that's pretty good, right? But is that going to happen all the time? If I knew that I was going to risk 70 ticks on this trade and that trade and every single trade right away, then it's perfect, because then I know how much I'm targeting or what I'm targeting. Am I targeting a level? Am I targeting the P&L? You see, as we go down here, this trade would have made you 95 if that's how you're trading. But whatever you want to trail it, you know, there are different ways to trade the time bars. You could apply plenty of systems to it. I honestly have not found much success in trading time bars alone. Notice I'm saying alone, because honestly, I find something that works, and then out of nowhere, instead of risking what I thought I was going to risk, I'm risking a lot more. So then I go changing stuff, then I start getting nervous, then you go on tilt. I don't know. There's just always always something wrong with just trading the time bars by themselves for me. I can only speak for me. This is only for entertainment purposes and educational purposes. But I prefer some type of Renko bars. Now, for right now, I'm using Ninja Renko bars. Soon I'll have my own bars out that we're working on right now. But for right now, I'm using Ninja Renko. I like Ninja Renko bars. I'm able to apply a very, very strict money management protocol to the bars. This is my system right here that I'm working on. It looks weird, but there'll be more information on this later on. Actually, this is cool because see, while I was talking, this trade happened. I should have taken a trade, but I'm not trading right now. I'm just trying to give a little information out there. This is this is called a Quake shot according to my system. There's a Quake shot. So using let's say I take this Quake shot right here. Let's just say I do. See the little white line? That's where I'm supposed to enter. Sometimes, obviously, you'll get a delayed entry. You might enter it a little less, or you might get a better entry. But this is the optimal entry right here. My exit is right there. Nice and simple. On this specific size, this is a 4-tick size. I call it 4-tick 2. On this specific Ninja Renko size, for this trade right here, the risk is 14 ticks. That's an easy 14 tick risk. My PT1, my first profit target on this trade is predefined right here. 14 ticks, you see? And I don't actually take those directly. Sometimes I just go a little more, or I could trail it until the bar closes. Either way, I have the option. I don't have to rely on maybe risking 50, maybe risking 70 just to get 20, 30, maybe getting 100. I like a predefined risk. It's the way that I was taught, and that's the only thing that I've ever seen work for, well, my favorite traders actually, that the ones that do have predefined risk. Right away, you know that I'm risking 14 ticks. Now I could say, hey, you know what? I want to trade one contract, $5 a tick. You know what? My money management allows me to trade 2 contracts, 4 contracts, 10. It doesn't matter because I know that I'm risking 14 ticks each time. If I know I'm risking 14 ticks each time, and the rules that I have for money management are requiring me to risk, let's say $100 on a trade. Well, not requiring me, but they are allowing me, because you could do whatever you want. But $100 on a trade with 14 ticks, I can do a little bit of math and say, okay, well, $100 divided by 14, that's about $7 per tick, right? $7 per tick. Now, obviously, the YM, the Dow Jones, that's what this is, runs at $5 per tick. So we're talking maybe about a few micros. This would be like 14 micros or something at $1.50, 14. That'll give you $7 at 14. That's $98. Now, I can do that right there. I can come in, I can set my predefined risk on each trade before I even start trading, according to whatever rules I have. That way I know that I'm only allowing myself to lose about $100 on a trade, and that's okay, because now I can make the $100, or like this trade right here, this trade went past P1, bam, you make the $100. And because the way that the system goes, you make a little more than that easily. But it went all the way down here. And one of the rules that I have for that's VWAP, by the way. This gold line is VWAP. I love trading towards VWAP, not on VWAP. That's also explained later on. So this is what is it? That's 26 ticks, so I wasn't even looking. 26. You probably got filled at 25. So now you take this trade right here, or I take this trade right here. I risked 100, but I got 24 ticks out of it because I like taking profits at VWAP. I don't like taking I don't like risking anything going through VWAP unless I have something really, really, really powerful coming up. But there it is. Look, 168 on that trade. That's 168 bucks on that trade using a price-based bar, which is a Ninja Renko bar, instead of a whatchamacallit, a time bar. Sorry, that was just it's all just code that I have going on here. It's just I'm still working on this system right now, so there's still a bunch of like extra stuff that doesn't belong here. It won't be around when I finalize everything. Also, this system has an amazing thing that I'll explain later on too, but you see this little efficiency thing bar that I have right here? It's an algorithm that tells me what size bar I'm going to be using. Again, all this will be explained later on. And this is one of my favorite little tools, because with this, I'm able to change the size of the bar according to volatility. There's something that I created, which I'll explain later on. It's called the speed equation. It literally tells me what type of bars to use, when to use them. I can trade any time of day, whether it's the Asian session, the Australian session, the London session, New York, or whatever, using the speed equation. I couldn't possibly do that on a time bar. And believe me, I've tried to use these time bars. Look, it looks like there's a potential long here. Well, using a time bar. This isn't my system. This is just me looking. I want to see if the system even gives you a signal. It's not right now. It's all red. All red. Buyers are coming in and buyers are dying out. There's a signal short, but I don't know if it's not a valid signal short, because I haven't put the proper setting on this yet. This is not a valid short for me. But let's say you did take it, and it just hit the stop. Perfect. Actually, this is a perfect example. It wasn't a valid short, regardless of the arrow. That gets explained later on, because I also have a setting for that, where you could just push a button. Like it's right here. See, it's called power mode, and it gets rid of these type of trades. These trades are useful in their own way, but that was definitely not where to use them. Now here comes another one. There's a potential trade right there. It's bouncing off of VWAP, so that's really a good trade. I'm not taking it because, well, I'm making this video and I'm not paying attention. But let's say this. Actually, I might take this trade. Let's see. All right. Actually, this will be great because this video wasn't supposed to be like that, but I like it. I'm taking the trade. Now, there's a small trade. There's your target right there. Why is the stop so high? Jeez. Okay. So you took the trade. There's the profit right there. Bam. See, I'm up 260 on that. That was actually not bad. That was a tiny little trade. Obviously, this is not where you want to enter. You don't want to enter here if the profit's right here. That's 7 ticks. But for video purposes, that's what I'm trying to say. I knew that I can take 7 ticks, and my risk at this point is 12. So yeah, the risk reward is bad on that one. But again, I wouldn't take that trade normally. It was a very small risk, and I just wanted to take it to show the ability of trading a price-based bar versus a time bar. You can just get away with so much more. Another thing is, because the price-based bars, you can actually see price action. You see real price action. See these triangles forming up and down, up and down. On a time bar, you only see a straight shot down, straight shot down, straight shot down, maybe some congestion. Maybe. Eventually you do see a triangle, but by the time that this triangle happened, there was already a trade all the way up here. You see, so now you know, you didn't even know you were in a downward pattern until there. Now we're in a down pattern. Now you have straight shot down, straight shot down. But in between that, if you look at the proper sized, let's just call it the Renko bars for now, you can get entries. You can actually take trades from in here. See this little circle? From in there, you can actually get a trade in there somewhere. Let's see if there even was a trade. Because sometimes, the good thing about this is that I don't like guessing anymore. That's one of the faults that I always had, assuming the market was going to go there. So I just turned everything into an algorithm, and I let the algorithm give me everything. It looks messy now, but that's only because I haven't fully finalized the algo. Here we go. We got 1, we got 2, 3, and then bam, look, the market went straight down here. Let's see. At that point, I don't remember if it was oh no, at this point the market was too fast. I remember I wasn't recording at that time. The efficiency dropped, so I would have been on this chart right here. Hold on. Where is my bad boy? Here it is. Okay. That was right when the market was moving up on the time bar. As you see the time bar going up. You're thinking, oh, it's going up. It's an uptrend, whatever. Luckily for me, I have a really powerful algorithm that doesn't allow these things to be mistaken for a long. This told me that we're getting ready for a short. Believe it or not, everything right there was pointing towards a perfect short. So it goes right there. I was getting ready to record, so I missed this trade, but I actually kicked myself for missing that one because I wanted to get to 300. That was my goal, just get to 300 for the session. I've been trading for like an hour, and I would have been fine. But 260 sounds great. I'll take 260, and I'll explain all that later on. That goes right there. Look, that trade hit PT1 right there. Your profit target number 1, 16 ticks in the money. And you're done. You take that trade, you're done. The risk, 16, you're done. If you're following a trailing method, then this is where you start reducing the risk. Me, I don't like this star here. That will be explained as well. But this is where you start reducing the risk, or I start reducing the risk. And I hold on to the trade for PT2 right there. Another star. Now, one of my favorite trailing methods when using these Renko bars, these Ninja Renko bars, is once price hits multiple profit targets, I just start moving the trail to where the bars close. See how it closed up? Right there, and then it breaks a couple of ticks. Bam, I would have been out of this trade right there. 45 ticks. If I'm using my trailing method. That also depends on what I see in the charts. Sometimes I don't want to use a trailing method, and I just want a quick scalp, and there's nothing wrong with that. See, those scalps are money. 16 tick risk for a 45 tick win using the trailing method. Now, this signal will be explained later on, but I just want you to know this is called the Omega Star. The Omega Star is the most powerful signal I've ever seen in any system. I created it about, 2 years ago, and I never knew how to really use it. I couldn't make $1 off of it. I just couldn't. I didn't know how to use it. I didn't know what to do with it. So I just pretty much left it in the background. And then one day when I started really looking at it, combining it with the rest of the algo that I'm using now, it all started making more sense. And instead of being afraid of the signal, I use this signal now. I use it either to take profit. So when you see the star right here, that Omega Star, by the way, I'm either taking profit as soon as the bar closes, I'm setting the trigger, or I'm setting a trail right here. And if you set the trail right there, look what happens. Look, you set the trail, you don't get out, you just let it rock. It beat the Omega Star, and now you set a trail for the bar to close it up, and you're out at 65 ticks. These are all the things that I can do on a price-based bar. Price-based chart, not on a time chart. Time charts I use because I love to be able to see an overall view of the market. I like to pick out little support, resistance areas, little demand areas, and I do like to see sometimes the overall trend if it's moving up and down. But as far as just straight trading, I let the algo do everything. I already incorporated everything that I know into the algorithm, into the system actually, and I don't have to worry too much about the time bars. That's actually one of the reasons why I created this thing, and I'm still creating, I'm still working, still fixing stuff. Did this just happen right now? Oh, look, it went up. There was a lot of bars. That's what this is. This is just buying momentum. That's all it is. Simple buying momentum. Notice buying momentum died out, divergence. No, that's not what the algorithm is. It's not as easy as, oh, there's a quick divergence, there's a trade. No, it's a very sophisticated algorithm. And these are just little tools that I use to also help me get confirmation of my system, of my signals. So this was not a good trade right here because of all the buyers. That's fine. Second attempt, I can't tell if there was a, oh, there was a star. There's a lightning bolt. There's something that I created also. It's called the impulse drive. You can't see it yet, but it's extremely powerful. And I wasn't even using that on my system, and the system was still very consistent. And then out of nowhere, I started implementing it just for fooling around, and it increased my results. I was able to avoid a lot of losses because of it. But again, I've tried these things on the time bars, and they just don't work as well. Look, right now, what time is it? It's 2:30 p.m. The Dow is dropping. Now, see how we're having a nice drop on the time bars? I don't have an entry. There's no way to get in on any of these bars. Look, the time bars, there's no entry. But while I was talking, look what I had here. We're optimal efficiency. Let me just double check everything because I want to make sure that I'm not giving any false information, because the one thing I want to do is be transparent about everything. Okay, where is that thing? Yeah, we are optimal. Oh, there it is. Okay. The Dow is optimal efficiency. What happened right here? There was a lightning bolt all the way up there. So this signal had a star. Okay, so this is a loss. Look, this was a losing trade right here. I didn't take it. It was at a nice pivot point. It followed all my rules. You took the trade, and guess what? It was a quick loss. 15 ticks, give or take. Always give or take. But right away that this thing lost, I don't just take reversals or anything. I let the algo tell me what to do. Bam. I had something called the drawback shot right here. Drawback shot. The drawback shot, I liked it because it bounced right off of that level. Drawback, signal, give me a little confirmation. There's the impulse drive giving me confirmation on the trade. I haven't put a profit target on the drawbacks yet, but I know that it's about right there, 15. And because I love that it's bouncing off of this level, I let it run a little bit. Now, how do I use the time chart? Once I did that drawback shot, I start looking here. Let's backtrack. I start looking at the time chart and saying, hey, is it expanding or contracting or what? All right, so we're in a nice down move right here, correct? So you take the trade right here, and as long as no up bars are closing or the market is not moving up that way, I just let it run a little bit. That's just one of my trailing methods as well. But while you're in the trade, guess what happens? An Omega star hits. Now, I had just lost this trade. I took this trade right there. No, I didn't take it, but for the scenario right now, I take this trade right here. I get out right there because I have a predefined risk, 15 ticks. I take this trade right here because I followed my rules, and I'm just trailing it because I see that there's another level right here. I'm targeting that level. Believe it or not, if we're close to a level, I'm targeting the level. Unless I see some clusters or chop or a bunch of other stuff that tells me the market's getting ready to go the other way. So the algo tells me to enter here, I enter. Bam. I see an Omega star. Normally I start freaking out. I don't start freaking out. When I see the Omega star and I know that I'm down, I might just take profit right there and say, I don't want to fight the Omega star. I'll take a 20 tick profit. That'll cover the 15 tick loss and give me 5 ticks in profit. But again, if I'm feeling, if I'm looking at the market and it feels right according to what I see, I let it go a little. I'll trust the Omega star. It's a very, very powerful signal. So trusting the Omega star to push me right into, bam, right there, pivot point. I think that's pivot point. That is 34 ticks and I'm out of the trade. Bam. I will not trail any more than that. That's all I needed. So I lost 15 on the one trade, which is okay. That's what the money management protocol is there for. You have to be allowed to lose trades, or what's the point? You have to give yourself a room. This is a business. So lost a trade, came over here, bam, took 32. By the way, notice while I'm talking, notice how this level right here, we're now at low efficiency. Low efficiency on this bar. I mean on the efficiency bar. I call it the efficiency optimizer. I just haven't fully set it up yet. But 30% low efficiency, I don't want to trade this chart anymore. By the way, that means that the market moved so fast that these signals are now a little bit invalid. And look, the market dropped even while I was talking. Look at all these down bars, down bars, down bars. It just kept going down, down, and that's okay. Normally, when you see these things, you don't know where to get in. You're like, all right, the market's dropping, it's dropping. Me, I'm okay because I have an algo that works on price-based bars. The price-based bars tell me whether I'm going to go in a trade or not. And there was a trade right there. See that? Drawback. It came down here. The PT1 was about 15. You would have taken it. Or you trail it for 17 ticks. Done. Now, oh, look at this. This is perfect. Actually, this is great. It's happening right in this video. Notice how this says dangerous speed. 5% efficiency. Okay. At this time, there is no way that I'm taking a trade on this chart. I don't care what signal pops up. There's no way. Again, these are things that cannot be seen on a time bar. But luckily for me, I created the speed equation. The speed equation right there is embedded into an algorithm, and that tells me stay away from this market. Soon I'll have this telling me the exact size. That's going to be awesome, actually. I'm really looking forward to that because I'm really creating this for me. If I get to share it, then awesome. I mean, it's not going to be cheap, I'll tell you right now. But right now, I'm creating this for me. It's been about 2 years in the making. And I know that I'm trying to make it as easy to use as possible. Because that's the point, honestly. Hold on, what is wrong with this thing? Sorry. Yeah, okay. The volume is too high. Oh man, was the volume too high on the mic? I'm sorry if it was. Okay. So that's it. I don't want this video to drag on. I have a little series that I'm starting soon. It's called Rags to Riches. If you like the video, then please click like and subscribe. And hit the little bell icon so that you can know when I post a new video. But this is going to be very interesting, guys. I think that a lot of people are going to be very happy with this once it's completed. But for now, I just want to share my results on it. There's a trade right there that I'm not taking. There's no way. I just said I'm not taking a trade. And there's no way I'm taking a trade. See that? It's at dangerous speed. That's part of the training, actually. Right there. That would have been a target. Nope. It hit the stop instead. So, why don't we look at, let's look at this thing right here. What is going on here? That's at dangerous speed. This is, even the 5 tick is at low efficiency. That means that something happened in the market right now that's making the Dow move like crazy. Low efficiency, all this stuff will be explained later on. All I know is that for right now, looking at the time bars would not give me the trade that I was looking for. It wouldn't do anything. I mean, if I did take a trade, it wouldn't give me the predefined risk that I'm looking for. Look at this. Let's say you're trying to take a long here. It's 44 ticks. And I'm only willing to risk about $100 on a trade. So that means I have to change my position size each time I take a trade. Nah. Or I have to DCA, which some prop firms don't even allow. Or if they do allow, it's because they're trying to trick you. Because if you DCA too much, you violate some other rule and you don't get a payout. There's a whole mess. My goal with this whole thing is to be able to trade with defined risk and a defined reward. I want to know exactly how much I'm risking, how much I'm taking out. And that's it, guys. That's it for now. Stay tuned for more content. I hope you like this video.